Now, my joy about this video is not just all about you learning about the direction of the market, but you need to understand the context behind what is going on in the market. For example, why is the market going in a certain direction? Why is the market going bullish? Why is the market going bearish? Like as I said, if you watch this video from the beginning to the end, because it's a live webinar session with students, all right? So there are a lot of information being discussed. This is not just like a regular YouTube videos. This is a live webinar session. So if you watch this video from the beginning to the end, you're never going to have any problem with direction of the market anymore as a trader. So there are a lot of information for you guys to learn. And we didn't just discuss all the direction of the market in this video. We also discussed about trading psychology. Part of this video, you're still going to learn about trading psychology, but the main thing about this video is just all about direction of the market. So stay tuned, get your writing materials ready, and then let's get started. All right, so I'm recording the session for the people that maybe couldn't make it one reason or the other. This is our objective as trader. This is our goal. Before I dive into this very well, I want to first of all believe that everyone that are here. Let me stop sharing my screen. Our goal here is our goal, not on this webinar. Our goal as traders, why we started trading, is for us to make money. All right. Um, Financial freedom. That is the most important thing. All right, for us to make that money is the most important, irrespective of how passionate you are in terms of how you love trading, because you just love to draw some lines on your chart. You love the fact that you can predict the direction of the market or whatever. But overall goal is that we want to make money. All right, and for us to make money, we have to, because this is how money operates. Generally, for you to make money, you have to exchange value, right? Like the way the cosmos works, you have to exchange value for them to pay you. So let's say I give you this water, then I will exchange with value, that is the money, then you get paid. All right. So and in value exchange, there are principles that are involved. And this is one of the things I was discussing with one of my students this morning. I think his name is Ryo, one of my one-on-one students. We are discussing about the right way to become profitable trader. You know, this webinar is different from maybe every other webinar you have attended. Remember what I said, this is what our goal is. I'm going to come back because this is my roadmap of my one-on-one students. Any one-on-one mentorship I'm doing with people, not group mentorship. I mean, just me and the student. This is what we discuss. This is the roadmap. I'm going to show you guys everything so that we'll just go through it one after the other. Although we may not be able to go over all of them today because obviously this webinar can exceed maximum 1 hour or 45 minutes. But let's just see how far we can go today. What I'm trying to say in essence is that there are right way to make money as a trader. Yeah, because trading, the way the industry is wired, that is the reason why we have so many failures. Like this industry is the highest number of failures when it comes to, like, for example, comparing forest industry with maybe tech industry, people who are programmers and all that, or any other industry. We have the highest rate of failures in forest trading because we humans, the way we are wired like principle driven. For example, let's assume you are, because I was a software engineer before I became a trader. As a software engineer, if you are asked to, for example, to produce something like this, maybe something of this design, there are specific things you need to do. And once you do it correctly, you always get the design every time, every time. And the other field like software engineering, other field like maybe the maybe graphic design or any other field you can learn online. Once you go to YouTube, you go on YouTube or go to any platform, maybe a mentorship, and they teach you this is the rules, this is whatever. You apply it, you're going to get exactly the same outcome every time. But it's not the same thing with trading. All right. That is why I said the way industry is wired, that is why we are getting more high rate of failures in trading because as we come into the industry, we humans, we have already been programmed that once we learn something online, okay, this is how it is, this is how to apply it, and then you get the result. So we came in with that mentality that we'll be getting this result all the time, but it doesn't work like that in trading. What I'm trying to say is that There are some things you will learn now on YouTube. For example, trading strategies, how to get the direction of the market, how to get perfect entries, all this stuff of you will learn on YouTube. Account flipping, all everything you will learn on YouTube. You can't, you will learn it and it will work perfectly, but you are not going to be getting the same result every time. In the sense that there are times you apply the principle, you're going to get a loss. There are times you apply the principle, you're going to get a win. So it's a mixture. It's not something that you are very, very sure of. That is the difference between trading and other field. For example, now as a programmer now or as a graphic designer, if I know that this line of code will produce this particular outcome, then there's nothing that will change it. Whether it's daytime or night or it doesn't matter, irrespective or no matter how many years it will stay, it will still be giving you that same outcome, that same result. But in trading, you won't get the same result all the time. And that is why many people are frustrated because of the wrong mentality. That's why they are frustrated because of they are seeing it work online, but if they apply it on their personal account or personal trade, they don't get the same outcome all the time. And that is because that's how trading is. That is why, as traders, we need to, redesign a system that give us specific, the same outcome all the time. Something that we can trust, something that we can rely, not something that can fail. And that is why management part of trading, if you guys have been following me for a very long time, you know I always prioritize that. That's why the management part of trading is the key to profitability as a trader. All right? Because that is the only thing now that will still give you consistent result, be it daytime, nighttime, wherever you are, whether you're in Canada, US, in Nigeria, Uganda, whatever country you are, management part of trading will give you the same outcome every time because it has its role that it plays as for you as a trader. It's not, but management part of trading is not responsible for direction of the market. It's not responsible for entry. It's not responsible for whatever you do on the chart. Okay, it has its own branch entirely. Its own. That's why you saw this illustration, this roadmap I drew here. You see, trading success carries just two things here: the analysis part, which is the decision part, and then the management part, which is the second part. Now, the problem is that everything we see online on TradingView, anything you see on YouTube, if I go on YouTube now, let me just see, let me just type YouTube and then see, just type forex trading. And let's see what will pop up first. You can see, before I even type anything, you can see smart money concept. Everything you are seeing here, irrespective of channel, including my own YouTube channel and other YouTube channels, everything you are seeing. So now you are seeing candle moving or you are seeing anything like TradingView or candlestick, they revolve around this first part of trading, which is this decision part, this analysis part. And this analysis part contribute just 30% to your trading progress or to your trading success. It's just 30%. Not that you're not going to win trade. In fact, you can even get to the point where you get a withdrawal or a payout. But the consistency is what you need. The consistency is not there if you are just dependent on just one thing, which is this analysis part. There's one of the recent video we uploaded. I think my admin uploaded it last week or last 2 weeks, where I was talking about my friend that came to me and then I taught him this management part of trading. So if you are a trader that have been running with just this one information, the analysis part of trading, like technical analysis, everything you do on the chart here, you are doing it very wrongly. You are not going to last in this industry. Trust me, you're not going to last until you are able to build strong discipline. You can see you build strong discipline on the management part of trading, then you cannot start gaining stability. And it's going to take time before you get to that level. Once you are able to balance these two, then you can call yourself a profitable trader. But overall, like as I said, we don't run with just one of them. For example, you can just because I've been prioritizing management part of trading, you decide to just discard the technical analysis or analysis. This analysis doesn't mean technical. It's fundamental analysis is still part of it. So you discard it and then be running with it. No, 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 it's not enough. Your hands, if you are clapping with one hand, you don't produce sound. But if you are clapping with two hands, then sound will come out. So just hold your decision part, your analysis part with your left hand, then hold your whatever your management part with your right hand. Then you can be able to make good sound when you hit both of them together. So whatever you do as a trader, you must balance these two. And this is my role here this night to help you guys balance it. But first of all, we're going to start with this first part because irrespective of how good you are with your management skill, your discipline, whatever, you still need at least an average win rate. And from my observation and from my experience as a mentor, I have observed that when you have higher win rate, you stand, the possibility of getting into error, for example, getting to emotional state whereby you start violating your trading principles, start misbehaving, it reduces because there's higher win rate. So the higher the win rate, the lesser the error. For example, the lesser the recklessness, the lesser the all the nonsense that people do when it comes to trade violation. Trade violation means over trading, over leveraging, just getting involved in that loop, right? So once your win rate is higher, then it builds more confidence for you as a trader. But if your win rate is very low, that confidence rate is very, very, very poor, even though you are very good at this point. So what we do as mentors, we help students to, get high win rate on this side. Then you don't necessarily have to have the highest win rate. An average of 50% to 60% is enough. Okay. And please, if you are checking win rate, don't use your prop firm dashboard. For example, if I log into one of my prop firm now, 500 FS. This URL, they don't even use it anymore. No, this will waste my time because I don't have much time here. So if you log into your prop firm dashboard, those win rate they show you there, just discard it. That is not your win rate. Your win rate is, you are the one that will calculate your win rate by yourself. Is by the days you have traded. For example, for in the week you can trade maybe 4 days, 3 days, 5 days. Then the days that you close in profit and the days you close in loss. That's how to calculate win rate. Then you will know if you are doing well or not. Now, when it comes to win rate, or because win rate builds that confidence, you must dwell on this side of the curve very well. Remember, this is the roadmap analysis. And when it comes to analysis, we are just dealing with three things: direction, entry, and exit of the market. Everything about technical analysis, everything about the chart, you are going to revolve around here, irrespective of your trading strategy. All right. That is one beautiful thing you guys need to be appreciating this meeting. So you're going to revolve just around these three things. And out of these three things, one of them is the key. That's where you guys heard me. But those of you that have got that keep that common direction. Well, what did you? I think direction is king. Yeah, direction is king in this market. So direction is king when it comes to this area, right? If you are a trader that can accurately predict direction on average of 60%, 70%, you have a good win rate. You have a good trading system. You have a good trading edge. Direction is stronger than every other thing here. And the way I teach my one-on-one student, this is what we do. We need to understand the role every one of them is playing here. And we build system that these three things complement each other. The way we do it is that when it comes to direction, of course, direction, there are two types of direction in the market, bullish or bearish. All right. So we are interested in what the direction is. Note that word I just used, WHAT. What is the direction? All right. And after we know the direction, we don't just start, developing another strategy, another pattern to engage it. All we are interested is we are because I told you I told you guys is a system that is, a system is a collection of, different entities that make up a system, but all of them, they have just one objective, one goal. So like your human body is a system, but is a all of them have just one goal, right? So this is a system with different component. I mean, this analysis part is a system with different component: direction, entry, exit, but all of them, they have just one goal. Once we know what the direction is, remember I told you what is the direction, that WHAT. The next word we're going to use is when, WHEN. When should we engage that direction? We are connecting everything together. What is the direction? Is it bullish or bearish? Then when should we engage that direction? Should we engage it London session? Should we engage it New York session? These are the two things you need to note. What is the direction? When should we engage? What is the direction? When should we engage? After you have engaged it, when should we get out of the market? Are we getting out? Are we going out of the market at strategic level or at the close of the day? Or like personally, I love to go out of the market at number first strategic level, then close of the day. All right. So these are the things that build up this system. For example, the analysis part. What is the direction and when should we engage the direction? Now, we're going to talk about direction first for now. Then later on, we're going to dive into the entry. And if time permits, we'll talk about the exit. And then if time permits as well, we'll dive back into this area again. This area as well, this management. When it comes to this management part, these two things is what we are going to work with. You can see how the roadmap came to all the way to this part. All right, that is the end of the curve here. Then we'll start going down to see other things that are there. Okay, so first we're going to talk about direction of the market. Direction of the market is so important. That is the reason why you still have it here under the management part of trading. That is one thing most beginner traders they fail to acknowledge. When they hear the word management, let me stop sharing my screen. When they hear the word management part of trading, most people think, oh, it's about placing stop loss, placing take profit, and most especially moving stop loss to break even, taking partial profit. This is what the average trader just know about management part of trading. But just now, I just told you guys right now that we are going to see work with direction of the market here when it comes to management. So it's a complete system. If you are dealing with management without direction, don't worry, when we get there, so that time will permit us. So let's talk about direction of the market. How do we come up with direction of the market? Because I told you, if you can get the direction correctly, like high chances that you are going to make money on that trading day. The goal is just to get the direction correctly. If you can get the direction correctly, you are going to make money. The reason why people lose money is because they are wrong in terms of that direction. And direction is just, binary. Binary means two entities, bullish or bearish, bullish or bearish. So it's very easy. You can see it right here, bullish, bearish, bullish, bearish. Now, how do we come up with this direction if it's bullish or bearish? There's something I want to explain to you guys right now, and I want everyone to pay up attention. Now, you see, no, not Hunter's theory. Let me see. Please pay attention to this part very well. Okay, I'm going to use this to explain it. Now, the privilege I'm giving you guys now, you don't know the value you're getting because everything here, if one of my students are here, they will just be surprised that I'm using this template to teach people. This is what I used to teach my one-on-one student, not even group mentorship, one-on-one student. So pay up attention, right? When it comes to direction of the market, remember it's bullish or bearish. Now, I want to say something that may be a little bit, I don't know, some of you may not believe it, but it's the truth. If I pick up a random trader now and I say, okay, give me the direction of the market for tomorrow or next tomorrow or next week or whatever. They just, okay, when the candle closes above the previous candle, close above another, all those stuff we talk about on YouTube. But they don't know what is behind the context behind what they are doing. I'm going to explain it to you guys so that you understand. If you understand the context, you understand everything behind it, you will never have problem with direction of the market for the rest of your life. You see, this market does not recognize anything both of us are seeing right now on the chart. For example, let me turn on my candlestick. You can see the chart just pop up now. Everything you are seeing here is what we do, what we use to analyze the market and all that. But in reality, this market doesn't recognize anything. Just those things that just move right now. This market doesn't recognize it. As a matter of fact, it doesn't even recognize your time frame. The only thing this market recognize what this market is after, what the only language of this market is this levels here, price levels. This right hand side is this is forex trading. This is trading is safe. Price levels. This is what the market knows. This is what the market recognizes. Price levels. It doesn't know candlestick. That is why you have multiple type of chart patterns here. Chart, whatever you can use. You can use night chart. You can use step line. Because to show you that candlestick is not just something a big deal. The market doesn't know candlestick. All right. Now, the reason why we use candlestick, I'm going to tell you guys the reason why we use candlestick. But first of all, understand that the market doesn't recognize any of this. It is programmers that put this thing into action. Okay, so that people, it can be easy for people to read the market. Remember, I told you guys, it's decision. Whatever we are doing on the chart is to make decision, right? So we need to we need some tools to help us to make decision without ambiguity, without just make solid decision, and that decision is either bullish or bearish. That is what the market recognize, price levels. So what this market knows is the price gained. For example, if price move from one particular level, for example, let me use this one, 100 to 200. This is gain in price, gain in level. This is what the market is all about. If price decline from 200 to 100, this is what the market is all about. There is a decline in price. There is a gain in price. This is what the market is all about. The market doesn't know fair value gap. It doesn't know order block. It doesn't know liquidity. It doesn't know any of those stuff. And that's why I said most of you are not going to believe what I'm telling you because you have been brainwashed on the internet with a lot of things you are seeing there. What price knows is price levels, gain in price, decline in price. Now, programmers or whatever, because it can't be market makers. It is, people that just want this industry to thrive. The reason why we have candlestick is so that we can know, because this market, it is human beings that are participating in this market. It's not robot, it's not AI. Though you can use those tools, robot and AI, to trade, but it is still human that program those robot and AI. So whatever, it is still human involvement, whatever you are doing. And collection of human involvement can be seen in price action, meaning that if everybody is going for buy on a particular asset, let's say we are on US 30 now, it will reflect that price have moved from, let's say, 86.00. I don't know if this is 86,000 or 86. Let's just say price has moved from 86 to 89. It will be very, very obvious that price has moved from here to here. So we need a tool to show us that price has. That's how this candlestick was programmed. All right. There are other things connected to candlestick like the high and the low, but the most important part is the body. All right. Price has moved from here to here, and for us to, because price can just be moving infinitely. Like as I said, the market is just after these numbers here, not anything else. The market is just all about numbers. So this thing can be moving infinitely, like as price. That's why you have line charts. So as price is moving, it can just be moving infinitely without stopping. But for us to have, make solid decision on time, that's why this time frame we are programmed. This time frame, price actually, the market doesn't know time frame. Nobody care about this time frame. That is the reason why you can see multiple time frames here, like 15 seconds, all these things here, but you can't see them on MetaTrader 5. Are you guys getting what I'm saying? So the market doesn't know it. That is the reason why you can the current price level here on monthly time frame will be the current price level on daily or weekly on lower time frame. You get what I'm saying? Because the market doesn't care about your time frame. But it is we humans that need this information so that we can know that, okay, at this particular interval, there was a gain in price. For example, let's say we are working 4 hour interval. So the last 4 hour, there was a gain in price. The last 4 hour, there was a decline in price. That is how all these things were programmed, all right? Now, for us to know the direction, because the reason why I'm explaining all this is because of the direction of the market. For us to know the direction of the market, we have to first of all understand, we have understood now that price moves from level to level. But during the course of the movement, for example, if price is moving from this 100 to this 200, remember this market is both parties participating, bullish, bearish, buyers, sellers. So one side will not just allow the other to just move straight line to that. No, 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 no. So it's a battle. That's why you saw that you can see those that I don't know, the bull versus the bear, that image that, the bull and the bear, they are facing each other like this because it's a battle every day, bulls and bears, bulls and bears. So let's say we are working with 4 hour now. Within this 4 hour, as price is pushing up, pushing up, pushing up, before it closed within that 4 hour, the bulls came in, the bears came in, the bulls came in, the bears came in. Or let's just say we are working with daily time frame. Before it closed for the day, both the bulls, the bears, they have come into the market. They opened here and then they close here. Now, with this information alone, we can't find the direction of the market, but there is a pattern we can derive from it. Remember, I just told you guys, price will move from 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 low to high. It can be this $100 to this $200, and it's a battle between the bulls and the bears. So why there's a battle between the bulls and the bears as it's going like this, going like this, going like this, going like this, it will be reflected on time frame that is lower. For example, let's say start from here, you get to this point here at this point, all right? The bulls gained momentum at this interval. Let's say this interval could be just 30 minutes time frame or 1 hour time frame. Then this one is the higher time frame, the daily time frame. All right. So within the last 30 minutes, the bulls gained momentum, and it shows on the daily time frame. Then price move to the upside again. The next 30 minutes, the bulls also gain momentum. All right, that's how this thing work. Then maybe somehow, of course, things may stop in the market. A lot of things may take place, price may decline as well. That is why you can see it will show on lower time frame that there was a decline in price the last 30 minutes. This is how it will keep reading. I don't want to waste your time. It will keep reading, keep reading, keep reading for the rest of the day. All right. Now, why it's doing that? It will be printed. It will be printed on lower time frame, 30 minutes, 1 hour, 30 minutes, 30 minutes. Sorry, let's work with just 30 minutes or 1 hour. Let us work with 1 hour, 1 hour, 1 hour, 1 hour, 1 hour, 1 hour. It will be printed. Even there can be moments whereby the bulls have gained momentum up to this point, but the bear just came with strong force, and then the declined price up to this level on daily time frame. It will reflect on 1 hour time frame like this. This is how direction of the market is formed. Now, the direction of the market that is formed here, we are working with this lower time frame, for example. The theory that is that you can deduct from here is that if the price action close within a particular interval, for example, if the bulls gain momentum within a particular interval, there is high chances that the next interval they are going to see gain momentum. That is how that if a candle closes above previous candle is bullish. If it closes below previous, that's how it came about. This is the explanation of what I'm talking about. The last 1 hour, the bulls gain momentum. Then there's high chances that the next 1 hour they will gain momentum, irrespective, as long as this one there was no decline in price. Now, this one, there's a reason why I kept this thing here. The next 1 hour, it appeared that there's a decline in price, but it didn't close below here. So the bulls that dominated within this interval here and here, they are still in charge of the market. So the bulls are in charge at this point. All right. So we are still bullish on this 1 hour time frame. The next interval, bullish, 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 until there's a great strong momentum. The BS came in and closed below the previous interval, which is the last 1 hour, with strong momentum. And then, so long they were able to dominate the previous one, there are high chances that the next one will also be better. There's a YouTube video we are preparing to create for you guys on almost something like this, but a little bit different. It's another topic, but we'll keep you guys posted when we upload that video. So now the next 1 hour came in, bearish, bearish, bearish. Then the boost came in with full force, close above it. This is how direction of the market came about. All right. And everything I just explained here can be repeated on any time frame. That's why I told you guys, the market doesn't know daily time frame, doesn't know weekly, it doesn't know month. It is we that work with all these time frames. So the same system of using the same process of using interval, for example, as it close above each other, on this lower time frame, that is how we can still do it on daily time frame. So if price, for example, let's work with this whole move now. As price close above here now, the previous day, the next day we should be expecting buy, 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 buy. This is how direction of the market will work. Okay. So at this point now, direction shouldn't be a problem because although there are still other things you need to see put in place. For example, if the market close above, for example, if the market close above the previous one, let me give us illustration. Yeah, I even give it as an assignment to my last student. You see, this let's assume this is daily time frame. All right, this is the previous day, and then the BS came with great momentum, but you can see it didn't continue to the downside. There are chances whereby it will keep pushing to the upside. There are conditions like that in the market. Remember what I told you guys from the beginning? Let me stop sharing my screen. I told you guys that the fact that we are traders, of course, we have been used to other system in the market. For example, not in the market, we are being exposed to maybe other feed. Those of you that maybe you are next other who's other job? Maybe you're a teacher, a banker, um, a lawyer, a doctor. I have so many doctors in our mentorship. I don't know why doctors love trading, but however, let's say you are whatever field you are, but me, I was a programmer, a software engineer before I became a trader. So the way we are wired in other feed, the same thing, we can be doing the same thing every day and then be getting the same result. But it doesn't work like that in trading. For example, we know that okay, as this has closed below, it's supposed to be bearish the next day. But there are some conditions in the market. If they push up, let's take a look at example of what I've explained to you guys. We'll take a look at, let's use car JPY. Let's talk about direction. I think if I can do justice to this, only this one today, maybe we'll fix another webinar another time. You guys, it will benefit a lot of you guys. Okay, so first of all, let's look at the one that fade. No, let's look at the one that didn't fade. For example, you see after this reversal here, this is called JPY. There was a reversal here at this point. All right. Let's take a look at it. Is this meeting will expire in 1 minute time. There's a reversal here at this point by this candle. The moment this candle closes above this, it has become bullish. But take a look. The next one came in with bearish momentum. Although it didn't close below this opening of this one. That's one of the reasons why I will buy the next day. All right. Then the next day come up, close above it, meaning the bulls are still in control. After the close, we should expect buy the next day. And then the bulls were still in control. After the close, of course, we should expect buy. But the next 2 days came in as a sell. But take a look, but take note that I didn't close below this one here, meaning the bulls are still in charge. So you keep looking for buying opportunity up till there was a change in momentum. The BS came in. BS, I said BS. That is selling, it's the same thing. Even up to this point, we are still bearish. Till Donald Trump, I don't know, and these people started messing up with the market. But this direction could be very, very difficult because the market is not up. Look at the close of this candle, look at the opening of this one. So it's not organic. But however, this approach of direction of the market will save you. All right. I know this webinar is about to end, but this approach will save it. Will increase your win rate like 10x your win rate. But remember, win rate is not enough. We need to see come back